Hello, Seth.
Hey, how are you?
I'm fine, thank you. And you?
I am good. Pronounce me your name so I get it right.
I'm Mikhailo. Mikhailo.
Mikhailo. Okay.
So yeah,
Excellent.
thank you so much for joining my podcast. You're my first guest.
I understood that. I thought it'd be kind of fun to do that. I remember when Harry Stebbings was starting his 20-minute VC podcast. I was one of his first guests. He was maybe a couple years older than you are now, but not a lot, like maybe 20. So
Yeah. So I very thanks to you. I have started recording, so
great.
I think we can start. And my first question to you, can you please introduce yourself a bit? Tell me more about yourself. So yeah.
Absolutely. So it's good to be here. I love that. I love that we have technology that can like cross a lot of divides, right? And I'm sitting here in Massachusetts. You're in Ukraine. Are you in Kiev? Where are you?
Yeah, I'm in Kiev.
In Kiev. Um, but I've been a venture capitalist for longer than you've been alive, for 25 years. I started in venture in 2001. Before that, I'd done some banking and some operational role. I had some operational roles at some data and telecoms businesses. But in 2001, I joined a Palo Alto based venture firm. I was based in Colorado, but the firm was based in Palo Alto. Um, it was loosely affiliated with SoftBank. It was called SoftBank Venture Capital. Eventually, kind of spun out from that a little bit. But I spent 5 years there as an associate, and then eventually kind of like a junior partner. And in 2006, I got together with three other partners, um, and we decided to start our own venture firm. We called it Foundry Group. And in 2007, we raised our first fund, and we don't number our funds, so it's a little hard to say exactly how many funds we've raised, but like something like 9 funds later, we have almost $4 billion under management. Um, so I've been doing it for a while. We invest now. We originally we started investing just in companies directly, and then eventually we also branched out to invest in other venture funds as well. Um, and so and that was built on doing just some private investing that we've done in other venture funds just individually. Um, so we've got about 50 funds that we've invested in, and then we've got hundreds of companies that we've invested in over the years. There's probably, I don't know, maybe 70 or so that are active in the portfolio right now. And interestingly, we decided a couple of years ago, we raised a fund in 2022, and then in 2023 we announced that that was going to be our last fund. We decided we weren't going to do anything more. It's hard to build a generational venture firm, and we had never really aspired to do that. The original sort of business plan, if you will, for Foundry was that we would do it for a while, and then when we were done, we would stop. And so that's kind of what we decided to do. So that's kind of where we are. I'm working on some new projects right now, and I write books. I've written 2 books. My last one was a national bestseller here in the United States about the future of capitalism. I blog a decent amount. Now I'm like everyone else. I'm playing with AI a ton, and just sort of enjoying all that kind of stuff too.
Yeah, I have a lot of questions about your books. But my second question is about also your venture capital career, because you started your venture capital career in a very unusual time because it was after internet bubble. So, and how did that period shape the way of you think about risk, hype, about AI nowadays, and real company building?
Yeah, I mean, such an interesting question. I've lived through a bunch of bubbles, and I've watched sort of the euphoria, and then I've watched the euphoria break a few different times, right? I mean, there was the internet bubble. There was some other stuff in sort of like 2000, I don't know, 8, 9. There was, or after that, after the GFC, there was the sort of euphoria that happened in 2001-ish or so when, all these SaaS businesses were being crazy valued. And I don't know that starting venture in 2001 made me overly cautious as an investor. Maybe in some cases it did, but it definitely made me realize that, at the end of the day, we need to build real businesses with real fundamentals, right? And actual sort of underlying metrics. And I think that sometimes the venture world can get stuck on hype cycles. I was happy to see some articles recently where people were sort of arguing like the thing that they are most interested in seeing in the Anthropic and OpenAI S1s, the regulatory filings, public filings, is their gross margin, right? Which I think speaks to, I mean, yeah, it's probably gross margin and a bunch of other things, but it speaks to this point about unit economics. Like it's great to grow. And I'm not even going to say what they've done is easy because what they've done is incredibly hard and never been done before. But, they've also done it with a capital stack that has never occurred in private markets before, right? And so, I mean, yes, you can grow businesses incredibly fast with poor unit economics if you're willing to subsidize them. And the question ultimately is, do you have sustainable unit economics that that makes sense? And I think that that's what, when people say they're looking at gross margin, like I think that's what they mean, and I'm glad to hear them say that because I definitely think my experience in 2001, and I mean to be clear, like I spent my first like 3 years in venture basically doing workouts of I would go into a portfolio company, I would assess whether there was a real business there or not. If there was not, we would either try to sell it or we'd shut it down. And if I thought there was, then we'd try to work through sort of how to right size it. But the fundamental question every time was like, does it have positive unit economics? And what are what's the customer acquisition cost to lifetime value, or the months to pay back customer acquisition cost? Like those are the things that I cared about. And I think that bled into my life as an investment partner because I think about that kind of stuff, maybe more than others do, just because I lived through my first experiences in venture. Like that was all I was looking at. And I saw what happens when those things are misaligned.
Mhm. So, can you please explain why Foundry was built in Boulder, Colorado, not in Silicon Valley or New York, because it's not a tech hub. So,
Yeah.
why?
One thing I would say is it surprisingly is a bit of a tech hub, right? I mean, it on a per capita basis, and it's not a big city, so that makes it a little bit easier. But on a per capita basis, it does pretty well. But I mean, the simple answer is that's where we lived, right? Brad and I both lived in the Boulder area, and we wanted to be a firm in one location. Brad and I had been, it's my partner, one of my original partners, Brad Feld. And we had been the satellite office of a large venture fund that was based in Silicon Valley, and we didn't want to have two offices. And so Ryan and Jason, our other two co-founders, moved out to be with us in Boulder. And we just felt like you could build, I mean, our thesis was great entrepreneurship exists in lots of different places. And Silicon Valley is an incredibly special place. And we were investing in Silicon Valley, even though we didn't live there, right? I mean, I think about some of our early wins. Zynga was one of our first investments. That was a big company that went public. Fitbit was another one that a lot of people were familiar with just because it's a consumer business. That was also Silicon Valley based. So, so we were investing there, but we felt like we could do that from anywhere. And, one of the things that I think is sometimes underappreciated about, I mean, the US is an incredibly big, like geographically big place, right? And so one of the nice things about being in Boulder was that you could do day trips to San Francisco. I mean, I don't recommend it, but we did it all the time. But very easy to get to the Bay Area or LA. And then to get to the East Coast is also not quite as easy, but relatively easy, 3.5 hour flight. And so we took advantage of being centrally located in order to invest in lots of different markets, right? So, everyone talks about Austin. I mean, gosh, we've been doing deals in Austin for, 15, 17 years now. And it's a very short flight from Colorado. So we felt like it was a great place to live. It's where those of us that had families wanted to raise our families, and we felt like we could build a great venture firm from there. And I guess we proved you could.
Of course, of course. So I also want to ask that Foundry has always talked about communities, networks, and what is the real difference between like having connections with actual building a startup ecosystem like you did?
I think there's two modalities to think about community, or that at least that venture firms think about community and network. And one is very transactional, right? And I think that's, I'm not saying that every person that knows another person in Silicon Valley is transactional about it, but I think they are more likely in the Valley to look at their networks as very transactional. I'll do this for you, you do this for me, we'll sort of trade favors. I kind of keep a little bit of a scorecard. One of the things that we really developed early on in Boulder, and that's a very strong ethos of Boulder and other places, Kiev may be this way as well for all sorts of different reasons, but which is this concept of give first. We talk about it a lot at Techstars. Brad just wrote a book called Give First. He talks about it very directly, but it's this idea that you don't keep a ledger, right? You're not ticking and tying. Okay, well, I did this. I did your podcast. Now, what are you going to do for me, kind of thing. But that you throw goodness out in the world through your actions, and it ultimately comes back to you in some way. And I think that is how we feel and have always viewed network at Foundry, which is, we are building network because we like being connectors, right? We like bringing people together. Our network, we're very deliberate to build it as what we call a mesh network, not a hub and spoke network. We don't want everything to come through us. We want people to be connected with each other. And I think that all of that drove a certain behavior inside that network that was incredibly additive and supportive. And I'm continually hearing from CEOs. I mean, something as simple as like the Foundry CEO email group that we have, and lots of venture firms have CEO groups, but the Foundry group, I'm told by CEOs very consistently, is really impactful and just much more robust and helpful. And I think that comes from that ethos. People are looking for ways and reasons to help each other out.
Mhm. And my next question is about like looking back, what part of the Foundry was most misunderstood by other investors, by founders, but it did great.
Well, I mean, there's a couple things that come to mind when you ask that. It's also an interesting question. I mean, one is that, my partners and I are very close, and we're known for being close, right? It was we, especially early on when it was, now we're a slightly larger partnerships. It's a little bit different. People in different stages of their lives, but we would vacation together. Our families are friends, all that kind of stuff. And I think people misunderstood that to mean that we sort of always agreed, or, always got along, if you will. And the truth is we had lots and lots of arguments along the way, but we learned how to have disagreements in ways that were effective, right? And I think that made us a better firm. I think that's the kind of the biggest misunderstanding of Foundry, that is that somehow we got this reputation that we were just sort of this happy-go-lucky group, and we always got along, and we love each other so much. And yeah, we love each other, but it's more like a family than it is, I don't know, a commune or something like that. Like, we have plenty of disagreements and fights like families do, but bound together by something kind of greater than just, well, we have to sit near each other, to do our work. And I also think that we were very good at being supportive of each other's work in a way that other venture firms perhaps aren't, because we were never very siloed, right? We all kind of worked across, especially in the early days when we didn't have as many portfolio companies. We would often work across two or three partners would work on a company. That's gotten harder to scale just as the size of the portfolio has gotten larger, but we're constantly looking at opportunities to help each other out, not to get credit or to usurp. We always sort of assume the best. I have a welcome note I send to all the companies that I work with when I start working with them. And one of the things I say is, like, you should feel free to reach out to my partners, and you don't need to copy me, right? Like, I don't, like, I don't need to be in the center of your interactions with Foundry. If you have a question and you think Ryan is the right guy to go to, or Chris Moody is, go send them an email, and copy me or don't copy me. It doesn't matter, right? Let us manage the communication on the back end. And I think those are all kind of part and parcel of the same sort of thing, which is like building this sort of trust both between us and our CEOs, but also trust amongst each other and as partners.
Hmm. Wow, that's really very, very cool. So yeah.
Hope giving you some. I know you're starting your venture career as you are interning at a venture firm, and I hope that gives you some ideas for. I mean, look, we don't know how we don't have the one way to build a good venture firm. I mean, there have been plenty of firms that have been more successful than Foundry, but we think we had a pretty good formula. At least it's food for thought as you get into it. And I'm building another venture firm right now. I'm working on a project to invest in to create a fund to invest in quantum computing technologies, and we're having some of the same conversations about, okay, what kind of firm do we want to build?
Oh yeah. I saw your Quantum Advantage Capital, I think it's named. Yeah.
Yep. Yeah. Quantum
So
quantum advantage.
yeah, I checked your LinkedIn and saw it, but there's no website, so there's no a lot of information to diligence about it.
Yeah. Well, part of that is we are just starting to fundraise right now. So I can tell you that I'm doing it, but I'm not allowed to promote it because of securities laws in the US.
Of
And
course. Yeah.
we just thought for the moment, I mean, yeah, we could have a website that says a little bit more about what we're doing, but we just felt for the moment, we'll just have a splash page, and we'll let the world know soon what the details are.
Mhm.
Hopefully we'll get it raised.
Of course. So I also very want to ask you some question about your book Capital Evolution, because
Thank you.
the line that like immediately stood out to me from that that is the future of capitalism isn't left or right, it's forward. But what is forward for you, like in practice, in theory?
Yeah. Yeah, I mean, we're at a time of pretty in the U.S. of pretty fractured politics. That's true across Europe, maybe a little less so in Ukraine. For you guys are under siege, so it's a little bit different in terms of people coming together against a common enemy. But um, and I think that in the U.S. we tend to define things in terms of politics, right? Left, right, red, blue, etc. And my point about capitalism is, I think if we define it in terms of politics, that's a mistake, right? And then we're going to end up with one party that is the capitalist party, and then and one which I guess would be the Republicans. I mean, it's not so clear anymore. And then one party that would be the not capitalist party, like the Socialist Party. And I think that there are reasons to believe, and I just think that's a bad thing. And there's reasons to believe that people in both parties kind of have it wrong in terms of how they're thinking about the future of capitalism. And my co-author Elizabeth McBride and I wanted to write a book that sort of described a future for capitalism that was a little bit different than maybe how other people had been thinking about it, and maybe a little less black and white, quite a bit more nuanced. And so we decided to write this book about what we see as working and not working with capitalism. It's a little bit of a defense of capitalism. I like to say I'm a capitalist by job title, so and inclination. So I wear it proudly. But it felt like capitalism actually needed a bit of a defense right now, in a way that was, frankly, kind of surprising, sort of given at least my life. I'm shocked that we've got to be debating capitalism right now, but I also understand why there's so much pushback to it. And I think there's an allegory in the AI debate as well, which is that, like, I don't know that we do a great job of listening to people that have different perspectives. And I think one of the things I learned when I was writing the book was that I needed to keep my eyes and ears open more. And I was really perhaps more insular than I thought I was, in who I talked to, what I listened to, what stuff I read, etc. And I just wrote something on my blog about AI that kind of was along the same lines, which is that I think just dismissing people that are AI skeptics as just somehow being Luddites, I think is missing the point. And frankly, doesn't give agency or credibility, credence to some of their very legitimate concerns. And I think we do that at our own peril. And I feel like that about capitalism. Like if we don't listen to the people that are telling us that capitalism isn't working for them, um, and just sort of simply close our minds to that as a counter argument, I think we're going to lose the argument completely. And so that's kind of why we wrote the book. It's intended to be very readable. It's intended to be, part storytelling, part, you know, anecdotes, part, going through like economic studies and things like that. So there's lots of data and facts, and it's all footnoted. There's a lot of footnotes in the book because we wanted to make it, we wanted to back up what we were saying, but we also wanted to write it in a way that was very accessible and easy to read. Hopefully, I mean, you tell me, right? Especially a reader like you who's reading it not in your native language. Hopefully, we wrote it in a way that that seems readable and is quite accessible.
Yeah, it's really is. It really is. So
Appreciate that.
I, yeah. So I also wanted to ask, like, in the book, you argue the capitalism is not static, so it evolves. And what version of capitalism do you think we are leaving behind? And what version do we need for our future to build next?
It's a really important point. Capitalism ebbs and flows, and it looks different in different places, right? I mean, European style capitalism certainly doesn't work in the US. That's just not how we think about the world. And US style capitalism, for all its faults, but all its benefits, also doesn't work in, let's say in China, right? Who's running a very different playbook. So lots of different styles of capitalism. In the US, the type of capitalism we've been under was defined by Milton Friedman in the 60s and 70s, and is generally speaking known as neoliberal capitalism. And our argument is we've kind of moved past that. What we're moving towards is maybe a little opaque. We outline a vision for it in the book. We call it dynamic capitalism. We could very easily revert back to neoliberalism, right? That was the idea that shareholders were the only thing that mattered, and it created a society which ended up being highly unequal. I think it's partially to blame for sort of where things sit in the U.S. right now. And at least in our minds, the prescription is not to get away from capitalism, but is to perhaps soften capitalism a little bit, or at least acknowledge that there are a whole bunch of other constituents that companies need to care about and care about more explicitly. And frankly, those companies that cared about, employees, suppliers, community, et cetera, have always been more successful in the long run. But we kind of got away from that for a little while particularly in the 80s and 90s, call it early aughts. And it feels like, again, everything ebbs and flows. It feels like we're kind of, flowing to maybe a slightly different, more holistic view of the role of businesses in society. And frankly, businesses are going to have to assume that role, right? I mean, the government, at least in Western countries, government, and you tell me, I mean, Ukraine is Western, but you tell me if this resonates with you. But trust in government, trust in the media is not particularly high. And so here, what we have left, at least in the US, are CEOs and businesses. And we question in the book why we are giving them so much power and authority, but we're also acknowledging that they're filling a vacuum that is going to exist regardless. And so, we talk in the book about how that works, how that doesn't work, what the pitfalls are, the challenges, et cetera.
So yeah, and also a lot of young people, I know it in Ukraine, I think it also in US, that they feel that the economy is not working for them. It's
Right.
like, yeah, how can capitalism rebuild trust with a generation that feels locked out of ownership, of opportunity?
Yeah, I mean, this is key to the book, is our argument that we want to create more capitalists, right? There's different ways to do that, but fundamentally, we're trying to create more of an ownership economy, or we argue for creation of more of an ownership economy. And I think that I mean, if you back to my point about like really thinking about and understanding people's perspectives, if you the average in the US, the average age of a first time home buyer has risen from mid 20s to early 40s, right? I mean, the idea, and it's a bit of a proxy, but it's what we would call the American dream, but it's not a bad proxy for like, are you saving? Do you have a foothold on the economic ladder? And so many people don't, and they don't see the ability to do that. And I feel like that's what needs to change, right? I mean, and I get the appeal of socialism for people who feel like I don't have any assets and I'm just all I do is work. And what do I want to do? I want to get paid more for my work, and I want more free things from the government, and I want them to take money, more and more money from the people that have money. And that I think is a very reasonable response to feeling like you don't have any agency in our economy. And I think the right solution, this is not an argument against, a graduated income tax or things like that, but I think the solution is to create more opportunity, not to figure out how to take opportunity away from the people that already have it. And so that's fundamental to the thesis of the book, which is how do we create more of that sort of toehold in the economy in a way for more people in a way that gives them a stake in the outcome of all of the things that we're doing. Right? Too many people are just simply sitting on the sidelines.
So, yeah. And also, I wanted to ask some questions about the new builders, of
Sure.
course. And in the new builders, you like pushed back, and in our conversation, you pushed back against the idea that entrepreneurship isn't always in Silicon Valley. It's can be in a lot of countries, and uh, that narrative that unicorn startups it's only Silicon Valley, why it's dangerous?
Yeah, I mean, I think that there's a couple things that we talked about. So, New Builders was my first book. I also wrote it with Elizabeth, and it argues that, well, it demonstrates that the people that are starting businesses, at least in the U.S., are significantly more diverse than they've ever been. But at the same time, we don't do a particularly good job um, of getting capital to this new builder group of people who are starting businesses. And because of that, we're sort of underperforming as an economy relative to where we should be. It also talks a lot about sort of the ways in which Silicon Valley or tech entrepreneurship have sort of stolen the word entrepreneur. And really it applies and has historically applied and should apply much more broadly. And of course, the average entrepreneur in the United States or anywhere in the world is not building a tech business, right? And it's not venture funded. I mean, 1% of companies in the US get funding from venture capital. It's a tiny number. Now, very important companies, obviously creating trillions of dollars worth of value here. So there's no doubt about that. But but the reality is most companies are the companies you'd walk down a street in your city and see along the streets, right? They're restaurants, bars, fitness studios, beauty salons, barbershops, things like that. Those are the average business in really anywhere in the world. And so the new builders tried to give voice and agency to those businesses and talk about why they're so important to our economy. In the US, roughly 50% of employment and 40% of GDP comes from small businesses, right? So it's a huge portion of our economy. And again, it's taking nothing away from the innovation economy in Silicon Valley, et cetera. Like I've made my whole career in that world. But it is to remind people that there is a lot of power and a lot of importance in this sort of other side, if you will, of our economy in these small businesses. And I'm sure that's true. I mean, it's true everywhere, right? I don't have the stats for Ukraine, but I'm sure a huge part of your economy is also driven by small business.
Yes, yes. And also, you have written about ghost startups, companies that never exist because the founder never gets access to the deal. How many great companies do you think we never see because the like system filters them out so early?
Yeah, I mean, so the argument we make is that by the finance system in the world overlooking these new builder businesses, we are not giving a lot of businesses and a lot of ideas the chance to potentially flourish. And that's a real gap. And I think the analogy I would give is a huge percentage of GDP growth in the United States over the last 50 years has come from the inclusion of women in the workforce, as an example. Right. It's sort of logical if you think about it, but I'm trying to, and because it's logical, I'm trying to draw this analogy. Um, because there were a lot of smart women out there who were not, leveraging their talents in the workforce for sort of most of the history of the United States. And when we started leveraging their talent, of course, productivity went up, and of course, GDP went up, right? And we're making the same argument for funding a more diverse set of businesses. Um, there are some statistics that show that businesses started by women and people of color tend to raise less money and have lower revenue. And I think we sometimes get the causality wrong, right? It's not that they have lower revenue because they couldn't, or excuse me, they raise less money because they have lower revenue. It's because they have lower revenue because raised less money, right? We haven't enabled them to sort of dream as big, if you will, as some other businesses in our economy, and we're leaving companies behind, or they're not even building them, as you pointed out in your question around ghost businesses. I'd forgotten about writing about that, so I appreciate you reminding me.
Yeah, and also I wanted to ask, what do you think investors often miss when they evaluate founders from overlooked markets or non-traditional background?
I think they miss passion, right? I think I think there is a tendency to sort of evaluate kind of the idea and the market, and you sort of do all of that, and then there's also this sort of unfortunate trend in venture where people tend to invest in things that they know and understand. And so if most of the people that are allocating capital, we're getting a little better at this, but not a lot, are middle-aged white guys, then the things that resonate to them are the things that middle-aged white guys think about. So if you're, I don't know, I'm going to be cliche here, but you're building an app that helps you find tea times all over the world or something like that, like that will be intuitively more, it will intuitively resonate with the people that allocate capital more than some other business that's related to lived experience. And I think what's often missed amongst capital allocators when they're talking to someone from a different background is how that background potentially supported the thesis that they came to, why they're starting that business. And no different than what when we, I don't know, meet an ex Google product manager and they're like, I wish this product existed. Like, great, that's based on your background. And that ex Google product manager could be whatever, someone who looks like me, or someone who's a woman, or a person of color, whatever. But there's lots of businesses that trade off of people's personal experiences. But if you don't have that personal experience as a capital allocator, oftentimes you just miss it. And I think that kind of passion, that thing you bring to the business, the idea why you came to it, is just often missed.
Yeah, yeah, this is very interesting thoughts. And I wanted to ask you some questions about Ukraine. So, yeah, many Ukrainian founders are like technically strong, but they lack direct access to top-tier global investors, to global investor networks. And what do you think is the fastest way for a country to overcome that network gap? What is the fastest way to the founders for find this network?
Yeah, I mean, it's a fraught question, obviously, because it's more complicated for Ukraine than it is maybe, or that it is right now in Ukraine than it was 10 years ago in Ukraine, right? Because you guys were sort of in the process of being a part of the global tech community, and there were a lot of technical outposts in Ukraine from U.S. companies, um, and I think that it's things like this, right? Like I think you've got to like create that connectivity. You've got to be willing to travel to the web summits of the world and things like that. To some extent, you've got to be able to build a little bit of homegrown capital to support that. Um, but I mean, there's no easy answer. It's like showing up in the places where everyone is showing up, being proud about it, and being a part of that, participating in that global community. And then this is really key. People who are in the diaspora, and again, right now is a little hard time to sort of argue for this, but people that move to Silicon Valley to work for Google who are Ukrainian move back, right? And I think we've seen that I mean, Israel is a great example of a market doing that really, really well, where people leave, but they come back. Um, and I think and I think you see that in some other Western European markets. France, for example, was not really a venture market for a long time, and then a handful of people moved back because they were French and they wanted to live there. Um, and that really, I think, helped kind of bolster. So I think you've got to like show up where everyone's showing up, and then ultimately like come back and either build businesses in Ukraine, or if you're a Ukrainian diaspora building a business in Silicon Valley, like make sure you put a big office in Kyiv.
Mhm.
And
Yeah.
that's just how it works. Like, look, we saw it in Boulder too. You got to do the events. You got to like encourage people to get together. You got to like give first. You got to do all the things that create startup communities. Definitely, my partner Brad Feld wrote a great book called Startup Communities. That's a bit of a roadmap for that, and I think that could be a really good roadmap as well for Ukraine.
Yeah.
And
And
you're going to have to do it without government support, right? Because the government's preoccupied for obvious reasons.
of course, yeah. And what would you advise to Ukrainian founders who want to build global companies but are still physically and emotionally connected in Ukraine?
Yeah, use it to your advantage, right? Like you have a lot of natural assets in Ukraine. You've got a lot of technical talent. You see the world a little bit differently now because of what you've been through in the last 5 years. And like instead of seeing that as it's harder to travel, or I can, what there are more restrictions, things like that, use as much of it as you can to your advantage, right? Like, and don't be bashful about that. I think sometimes people from markets that whatever have challenges are apologetic for it. And I think you don't need to be apologetic for it at all. And I think cultivate global relationships, right? And I think you can. I mean, we're talking from thousands of miles away. Like, there's no reason that you can't do that. You cold emailed me as an example. Um, and so, like, I think the more you can encourage, which is partially why I wanted to do this, was like I want to encourage more, particularly young people in Ukraine, to like think about themselves as part of the global community and not give up on globalism. I'd like the world to not give up on globalism, right? I mean, I think there's been this backlash, which is, you know, when I remember sort of the mid '90s, it was right as I was getting out of college, and there was this like view in the world that like everything was great, and there was the Soviet Union had broken up and there was no more Cold War, and you could travel quite freely, and people were excited to see people from different countries, and it was really fun to get out and about. And I feel much more. I travel a lot uh, globally, and I do feel more shy, right? Certainly about announcing that I'm an American, because it's not. It used to be looked up to more. But just in general, I think there's been this backlash against the idea that we should think of ourselves as one world as opposed to sort of very nationalist. And as I said earlier, everything ebbs and flows, and I certainly hope that it flows back to being more sort of embracing of global community. But there's no reason why, and I would encourage you and your peers to lead the charge on that, right? And I think that'll only help Ukraine as a market, as a venture market.
Thank you for this advice. We really like Ukrainian founders appreciate it. So thank you for this. And also, I have one last question about AI, of course. And in one of your recent essays, you wrote that people inside tech often see AI as like superpower, while many people outside tech experience it as sometimes being used on them. And how should founders build these AI products without deepening this distrust?
Yeah, I mean, I right now. So thank you for bringing that up, and I really that post was really important. Again, it related to what I described earlier in writing Capital Evolution, which is like putting myself in conversation with people that have disagreements, and I think that it starts for people in the tech world of just at least acknowledging that look, not everyone is experiencing AI in the same way, and I feel like it would be hard for me to go back to doing my job without AI, and I mean, I am in and I'm a power user of it. Cloud Code is runs sort of continually for me in the background. I run it off a terminal, which is kind of funny because I started when I started with computers, we were all in terminal windows, um, and I usually have 3 to 4, depending on what I'm doing, agents running at any given time, and and that's awesome. Like I love it. I don't want to give any of that up, but I also want to recognize that that's a like 1/10 of 1% user experience, right? And even many people who are listening to this, even if everyone uses Claude in the same or OpenAI or Gemini, whatever you're using, in the same way, most people in the world are not, right? And they're on the back end of AI and these systems that are raising their rents or you know otherwise sort of optimizing them. And I think it's important to recognize that. I think as a founder, recognizing that a lot of AI was built for the machines and not built for humans, and trying to figure out how do you put that human layer on top of it, right? I mean, even my own experience in AI is it's very machine optimized, right? All of the various I'm abstracting machine here a little bit, but like all of the tools I use all have their MCP servers, right? And I'm connected via this machine layer, and I'm in this very I mean, I don't mind the text interface, but it is a relatively clunky text interface trying to direct the machine to do things. And it's not actually that easy sometimes to get what's in my brain actually into code somehow, right? When I sometimes write apps for myself or things to do, processes to do things. And I think that it would be great for founders to remember that there's a human layer here, and the human interface to these machines and to AI is also really important.
So thank you so much. This was like incredibly valuable for me, for Ukrainians. Like you give very, very practical advices, and I'm thanking to you.
Well, this has been fun, Mihailo. I really appreciate it, and I love the global connections across the world. So you have a friend in the States now, probably many, and look, I hope this will pique people's interest. I hope they'll reach out. I hope they'll think about how to be a part of that global community and leverage the like amazing tools and technology that we have at our fingertips to be able to do this.
Thank you. Thank you.
Wonderful.